Hi, this is Matthew Cratter from Trader University, and today I want to talk about the continuing stock market crash. If you're worried about a bear market or just want to see how I'm trading this sell-off, be sure to hit that subscribe button. So today, another big day of red. We're still in the middle of the trading day, but you can see that we're getting some of the big names off very, very hard. We've sold off about 10% from the highs, which is a very violent move considering we were at all-time highs about a week ago. But you can see that there are a few small pockets of strength that suggest what is happening. Netflix showing some green, perhaps on the thought that a lot of people are going to be stuck in their houses, especially if schools and workplaces close. You're going to have a lot of time to watch Netflix, maybe subscribe if they haven't subscribed before. Some of the drug stocks are up. Merck, Pfizer, Gilead is still up. And then we're also seeing some of the futures exchanges like the CME and ICE both up. These futures exchanges tend to benefit from increased volumes during bear markets. So those are some names to keep an eye on. That being said, I don't think that this is the time to be a hero. You definitely don't want to be in momentum stocks unless you're shorting them, but even shorting them can be very, very difficult. So couple things I wanted to point out. We talked about in our last video that we were waiting. Well, let's look at the VIX first. We were waiting for the VIX to get back up to levels that we saw in the fourth quarter of 2018, that sell-off, kind of the mid-30s. We did hit that today, retreating a little bit as the market bounces here. But I felt that we should at least hit those highs. This is a real, possibly a real pandemic, the coronavirus. And so it made sense to me that we should at least close somewhere in the mid 30s, and we'll see where we close today. So we're definitely hitting that. The S&P, we talked in my last video, which I'll link below if you want to see it, how we were watching the RSI for the SPY, for the S&P 500 ETF. This is something I would expect to get down to 20. I'm using you can see here I'm using a 14-day length. And I've adjusted the lower band down to 20 just to make it easy to see, the upper band at 70. But you can see that in previous sell-offs, we've definitely, especially in the fourth quarter of 2018, we got below 20 on the RSI. And so I would expect us to get back down there on this move, whether we see a bounce before that or we just head straight down. You can see we're getting a little bit of a spinning top formation on the S&P 500. It explored lower territory and then explored higher territory. It's right now trading right where it opened. But I would expect this to really continue. And historically what happens after a violent sell-off like this is you get increased volatility, you get a lot of chop, and the market rarely makes a V-bottom. I'd be very surprised if we see a V-bottom here where we just rally straight back up to new highs, which means it's a good time to be on the sidelines, a good time to focus on reading books and educating yourself about the stock market. If you are looking to play some names, there are a couple interesting names that have been holding in there, which is what we already talked about. We talked about Netflix, green on the day, holding very well here. Hasn't really sold off much. CME, ICE, ICE, and then one that we talked about in our last video, which seems to have a lot of institutional interest, is TEAM, Atlassian, TEAM. You can see it's tested the 50-day moving average twice and really found buyers down there and bounced off of that. So if we do get a market recovery, these are the kind of names that I would expect to rally. I'm currently completely out of momentum stocks. The only three positions I have on right now are gold, GLD is the ETF, and I like this as basically a 5 or 10 year hold. I'm not really trading around it, but it obviously does well in times like this. I'm trading the futures, the 10-year note futures. Let's first look at the 10-year note yields. TNX, you can see that they've just gone off a cliff here. The 10-year note treasuries yield at 1.28. I think this is an all-time new low. So there are two ways of playing this. You can play the IEF, and again, none of these are not investment recommendations, just telling you what I've been looking at. IEF is the ETF way to play this. As yields move lower, this should move higher. I also personally like doing things with the futures. If you know how to trade futures, the 10-year note futures, ZN is the symbol for them. this also has been hitting new highs as we rally. I mean, as yields fall. And finally, Bitcoin. Bitcoin has sold off some from the highs, but it's definitely would be. Sorry, I'll find a different ticker. It would be be a beneficiary of more money printing and looser Fed policy if we get an emergency rate cut. So it's flirting with the 200-day moving average here, but we have gotten a golden cross on Bitcoin, and it is trading. It's still up sharply for the year. Probably still the best performing asset of the year. Should benefit from the May 2020 halving. You can check out my other YouTube videos if you're interested in Bitcoin. But other than that, I don't think this is a time really to be a hero. Even though we have the VIX seems to be topping and we're getting close to a buy point on the S&P 500. I think the problem with this is has a potential to be a real pandemic. And so it's not really a technical stock market move. There's some real underlying fundamentals here, which we'll talk about in a second. And you can see that we're really pricing this in on the monthly chart of the NASDAQ. Very nice uptrend for the last 11 years with very few bearish monthly candlesticks. These are monthly candlesticks. The month obviously is going to close tomorrow, last trading day of February. And unless something drastic happens, you can see we're getting a sort of a shooting star formation, close to a shooting star formation with this very long upper wick where buyers tried to go higher and were rebuffed. And so this is a very bearish candlestick, can often mark a reversal. So I don't think there's any rush to get in this market. Obviously, if you're a long-term investor, if you have a 10, 20, 30-year time horizon, it might be a good time to be nibbling on things and buying. But again, there's no reason to be a hero here. Wanted to talk a little bit about some of the virus numbers. Obviously, I think a lot of other countries are responding a little more quickly and smartly than the U.S. is. I know they've closed off the schools in Japan, China, and I believe South Korea. I wish this is something they would do in the U.S. Basically, everyone stay at home, don't send the kids to school. This is a very dangerous virus, and because we're not acting swiftly, I think we're going to see these numbers go way up, and they could get quite bad. So the CDC is saying that 40 to 70% of the U.S. could become infected. So we currently have a population in the U.S. of around 331 million. So if we say that 50% of the U.S. could catch this, we'll just kind of use the midpoint or somewhere in the middle of that CDC range. That's 165 million sick people overwhelming the system. Mortality rate currently stands at around 2.3% overall, based on what we're seeing coming out of China. It's quite skewed though to people over the age of 50. That's where the mortality rate really kicks in, and so people over 60, 3.6% mortality rate, and then it just goes up from there with sort of the pivot point at 50. If these numbers are true, and if this spreads in the same way in the U.S. as it has in Asia, we're looking at roughly 3 to 4 million people dying from this, just in the U.S., and closer to 80 or 90 million people worldwide. If this happens, this would just be a tremendous tragedy. Stock market seems to be not quite yet pricing this in, maybe just pricing in supply chain, just disruptions, people staying at home and not spending, some sort of deferral of consumer spending. But all of which is to say that this isn't the time. This isn't the time to be a hero and try to catch the falling knife. Typically, these kind of sell-offs are quite difficult to trade. If you know how to trade S&P futures, you can short rallies. I've been doing a little bit of that, but you've got to be careful because the rallies can be very fierce, the snapback rallies, and you can really, as traders like to say, you can get your face ripped off. So it's a very good time to be on the sidelines, maybe be nibbling on some of the green names here. You can see Netflix has moved up another percent just as I've been making this video. But it's not a time to be a hero, so stay safe out there. Let me know what stocks or commodities or futures that you guys are looking at. And if you have any data on what you're seeing, especially if you're in a different country from the US, I'd be very interested in what you're seeing on the ground in terms of this virus. So stay safe out there. Be sure to hit that subscribe button if you haven't done so already. Hit the like button if you found this video helpful, and let me know what your thoughts are in the comments below. I'll talk to you soon. Thanks a lot for listening.